Hey everyone, welcome back to the channel where we break down stocks like we're chatting over coffee about where your money could really grow. Today we're diving deep into Unity Software, ticker U, the company powering real-time 3D experiences from games to industrial applications. Unity has been through quite the roller coaster since going public, and with its latest results showing revenue growth alongside some painful impairment hits, there's a lot to unpack for long-term investors. Let's get into the full picture of where this stock stands right now and what could drive it forward. At its core, Unity builds the tools developers use to create, run, and monetize interactive 3D content across platforms. Think of it as the engine behind many popular games, plus expanding into automotive, architecture, and even training simulations. CEO Matthew Bromberg is steering the ship with a focus on streamlining operations after the ironSource acquisition and some divestitures. The company operates globally with a strong presence in the US, Europe, and Asia, and it's been working to sharpen its edge in AI-assisted development and cloud-based tools. Breaking down the top line, Unity's recent fiscal year showed Create Solutions bringing in about $621 million, while Grow Solutions contributed over $1.2 billion, highlighting how the monetization and services side is really carrying momentum. Geographically, the United States accounted for roughly $518 million, EMEA around $601 million, Greater China $334 million, and the rest spread across Asia-Pacific and other Americas regions. This mix shows resilience even as gaming cycles fluctuate. On the earnings front, the first quarter came in with revenue up 17% year-over-year, which beat the company's own raised guidance, yet EPS landed at a loss that missed estimates by a penny. EBITDA improved nicely thanks to cost discipline, but one-time impairment charges tied to winding down certain assets pushed net losses wider. Over the full year, revenue reached about $1.85 billion, with gross margins holding steady near 59%, a sign the underlying business is stabilizing even if profitability remains a work in progress. Management commentary from the latest call emphasized cautious optimism around new AI features and industry partnerships, noting that core operations showed real resilience despite macro headwinds in gaming. They highlighted the strategic overhaul as a path to higher margin growth and flagged short-term disruptions from portfolio pruning, but stressed that long-term competitive positioning looks stronger with expanded reach into non-gaming verticals. Looking at the balance sheet, Unity holds over $2 billion in cash against $3.3 billion in total liabilities, giving it decent liquidity with a current ratio near 1.95. Free cash flow turned strongly positive last year at over $400 million, a big improvement from prior periods, though operating losses persist. The income statement shows gradual revenue recovery after earlier declines, and the company continues to invest heavily in R&D while managing debt levels that remain manageable relative to equity. From a valuation standpoint, Unity trades at a forward multiple in the mid-40s on next year's estimates, which is rich compared to peers, but reflects hopes for margin expansion. Price to sales sits around 6 times trailing revenue, and with no dividend, investors are purely betting on growth and eventual profitability. Relative to the broader software application space, the stock looks expensive on earnings, but more reasonable if the turnaround story plays out over the next few years. Strengths include that solid Q4 beat and expanding partnerships that position Unity well for recovery. Weaknesses center on ongoing net losses and the drag from past acquisitions. Opportunities lie in AI tools and non-gaming markets, while threats come from intense competition and valuation compression if growth disappoints. Overall, the SWOT points to a high-risk, high-reward setup where execution on cost control and new revenue streams will decide the outcome. Over the past year, the shares have dropped more than 34%, with even steeper losses across 3 and 6 months, underperforming both the software industry and broader tech sector. Short-term moves have been volatile, swinging on guidance updates and market sentiment, but the longer 5-year chart shows a massive drawdown from post-IPO highs, leaving plenty of room for rebound if fundamentals improve. When we run the intrinsic value lens using a discounted cash flow approach with conservative 10% discount rate and 3% terminal growth, the model points to a fair value around 10.63 per share. That's well below the current trading level, suggesting the market is pricing in more aggressive recovery assumptions than the base case supports. Comparing that to recent analyst targets hovering near $32, there's a clear gap between street optimism and what the cash flow math delivers today. For patient investors, this could mean waiting for better entry points or watching closely for evidence that free cash flow can sustain higher growth rates than the model assumes.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.